Well, good morning. I'm Yogendra Rana. And the topic for the discussion today is value added products and services. Value added products and services. Auto repair from your car insurer and fire extinguisher courtesy your home insurer. Not outlandish ideas, but part of the government's plan to allow insurance companies to sell related products and services. The government may allow general insurers to bundle their core insurance products with non-insurance products and services to increase insurance penetration and allow companies to offer competitively priced insurance products. Two persons aware of the plans discussed. So the plan, if rolled out, will allow the sale of membership and basic health care by health insurers, vehicle repairers, diagnostic services and roadside assistance by car insurance, and safety consultants, fire extinguishers and safety alarm from home insurers. The thinking is that insurers would provide comprehensive risk mitigation solution that would help reduce the incidence of losses for them, resulting in better priced products and lower overall risk for the nation. One of the two persons cited above said on the conditions of anonymity. Insurers have sought amendments to permit the sale of value-added services as they try to deliver new and valuable services to customers. They citing the IRDA. So the proposal to enable insurers and insurance intermediaries to provide services related or incidental to the insurance business as specified by IRDA is under consideration. The second, the Finance Ministry is working on the insurance amendment bill, which will also redefine insurance. The bill is expected to be presented in the Parliament's budget session after securing Cabinet's approval. This will allow the Centre to notify any other or ancillary business that insurance companies may be permitted to undertake beyond their core operations of providing insurance and risk coverage products to customers in consultation with the IRDAI. A query emailed to the Finance Ministry remained unanswered till now. These are good suggestions theoretically. In practice, insurance is still a push product. If an insurance company runs a diagnostic center, does it mean that their customers should only use that to get an insurance claim? Car repair is still a domain of OEMs and dealers. No dealer makes money in selling a car. They make money in service, repair of vehicle. My view is that insurers should focus on their core business. The experts have said. So to provide better auxiliary services while selling insurance product is a must-have, as customers' demands have changed and they are looking for combined products like if I am going to the gym, then I need better pricing for a health products. If I drive better, then I need a competitive quote on my motor insurance. So allowing these frills backed into the insurance products will not only ensure innovation and provide a competitive edge to insurers, but will also help the customers get very personalized coverage. So it is in the right direction. However, insurers may still not be allowed to sell financial products such as mutual funds on the lines of banks as the government and the regulators fear These specialized financial products could add more risk to their insurance operations. RDI had earlier suggested permitting insurance companies to sell even mutual funds, but the proposal did not find favor with the government. The first persons will not agree. So, keeping insurers out of mutual fund is fair, since mutual funds are regulated by the Securities and Exchange Board of India, while insurance comes under the IRDAI domain. So, in countries where a single regulator for banks, insurers, and stock market oversees all financial products, it is easier to sell all products under a single umbrella. In India, unless an insurance company also makes a banking license and is regulated by Reserve Bank of India and SEBI, they won't be able to sell mutual fund products. So the Department of Financial Services in the Finance Ministry and the insurance regulator would decide on a list of related activities or activities incidental to the core insurance business. These may include services and wellness packages clubbed with general insurance products. According to a note on the insurance amendments by law firm, insurers need to be customer driven in their approach towards products and services and offer a range of value-added services to their customers in addition to the core insurance products. So typically value-added services include non-core services in an industry or the enhancement made to the core product or service offered to the customers. The UK permits both value-added services and cross-selling services by insurers. Singapore allows life insurers to provide financial advisory to its clients, while Malaysia allows life insurers to provide services incidental to the insurance business. The Australian law, on the other hand, permits the conduct of business that is incidental to the insurance business of general insurers. However, life insurers are permitted only to carry out life insurance. So many people believe that having a car insurance plan is simply about receiving coverage against accidents. While protection against accident is a very important and valid reason for having car insurance, the benefits of car insurance go beyond basic coverage. The kind of coverage you have also depends on the policy you have opted for. As per the Motor Vehicle Act 1988, it is mandatory to have third-party insurance coverage if you are driving your vehicle on Indian roads. So whether you are buying car insurance online or offline, you can bump up your coverage with a comprehensive plan. So along with coverage for certain natural and man-made disasters, a comprehensive plan also allows you to opt for value-added services or add-ons as they are commonly called nowadays. You should note that car insurance add-on types and their coverage scope can differ from insurer to insurer, because zero depreciation add-on, engine protection add-on, consumable expenses add-on, roadside assistance or 24/7 spot assistance add-on, personal baggage add-on, these are all value-added services on motor insurance policies. So to get an estimate of what your premium could be after the addition of these add-ons, you can use a car insurance calculator. The add-ons mentioned here or named just now have their set of terms and conditions as well as exclusions. So these must be known before buying, because without trust the insurance industry would not work. Consumers pay premiums trusting that if they ever file a claim, the insurer will cover their loss based on the terms the customer or the consumer agreed to previously. However, in terms of widespread global disruption as we have witnessed over the last few years, consumers' trust and confidence in businesses and brand can waver. So trust is critical for insurers to maintain with their customers, and transparency plays an important role in that. But what else should insurers think about as they craft their insurance marketing strategies? Because the rising trends in the industry are changing now. Industry is ultra competitive and faced by disruptions. Few consumers are satisfied with their insurers, high prices, inconsistent services, problems purchasing insurance online, and poor views can all work against marketers fighting to help their insurance businesses gain market share. So keeping on top of the trends that we have outlined below can help insurance and their marketing teams counter these issues and provide a vital lift to insurance marketing strategies for this year. So for example, growing demand of coverage is there. So the most lines of insurance are likely to show increased demand from consumers this year. Despite 4 years of consistently rising premiums. The good news for consumers is that inflation doesn't typically affect insurance premiums. So despite this, one insurance industry trend to watch could be in the automotive sector, where observers expect auto premiums to trend higher while claim trend lower. That means insurers will need to prove the value of automotive insurance, the importance of having coverage, and justify the higher expenses to customers. Innovative marketing strategies will be critical to getting these messages across clearly. Then the accelerating product innovation. Like any industry, the insurance sector must innovate to grow. That includes developing new products that meet and sometimes anticipate consumer demands. New products like cyber insurance covers organizations and individuals against financial losses, liabilities, or legal costs caused by cyber crimes such as data breaches, data loss, and ransomware attacks. So the global market for cyber insurance is expected to grow from about $12 billion today to more than $90 billion by 2030. Then usage-based insurance is also known as telematic insurance, is a form of auto insurance based on data collected through driving apps. The Bluetooth connectivity built-in systems such as OnStar or in-car plug-in devices, data transmitted to the insurers in real-time measures the insured's braking, speed, and overall driving performance against the industry data to determine if the driver is a higher or low risk than average and calculates premium accordingly. And then parametric insurance is a type of fast-track disaster insurance in which the insurer agrees to immediately settle claims for an amount specified in the policy rather than the actual losses when a specific event occurs. So for example, a town in the southeastern India may take out parametric insurance to recover $2.5 million if an tornado hits the town. If a tornado hits the town. So navigating regulatory requirements is also necessary because like most business operators, insurers face a complex and rapidly evolving regulatory landscape. Depending on the nature and scope of an insurance operations, that terrain can include stringent data protection and privacy regulations. So insurance companies could provide insurance through third parties like retailers for products such as electronics or furniture or retirement products through banks or financial advisors. The key to delivering a customer-centric business model, of course, are to deliver a seamless customer experience and truly know your customer, and that requires using the right tools to listen to the voice of customer. Okay, thank you.